Welcome friends to our third video, grooming session for stock market beginners. In our last video, we learned about stock market. What is stock market, what is equity market and what is share market and why it is called equity market and what is securities. After that, we learned what is fundamental approach to investing, right? So basically there are two investment approach in stock market investing. First is fundamental and technical analysis. In this video, we are going to learn fundamental analysis versus EMH, efficient market hypothesis. So let's start. So we'll start with fundamental analysis. The definition of fundamental analysis is examines the company's intrinsic value using financial statement and market conditions. It is a holistic approach to evaluate a business long-term potential. Purpose of fundamental analysis is determines if stock is overvalued or undervalued. Let me ask you one simple question. For example, there is a company A with a strong brand and with loyal customers, and there is a company B struggling with growth and high debt. So which company you will choose for investing, right? Definitely you will choose company A, right? So it is just one factor to fundamental investing, right? So you have done sort of fundamental analysis, right? So then what is efficient market hypothesis, right? So the efficient market hypothesis developed by Eugene Pharma asserts that financial instrument priced fully reflect all available market information. तो ये कहना ये चाहते हैं कि जो स्टॉक मार्केट के प्राइस है उसने सारे फ्यूचर को डिस्काउंट करके रखा है, तो आपको चांस नहीं मिलेगा स्टॉक में इन्वेस्ट करने के लिए, राइट? So consequently, no investor can consistently outperform the market through the stock analysis or timing strategies, as all information is already priced in. तो efficient market hypothesis कहती है कि आप स्टॉक मार्केट में ऐसे ही पैसा कर सकते हो if you take significant risk, but not really, friends. कैसे? By using fundamental analysis. Let's see. So information used in fundamental analysis is company's financial statement like income statement, balance sheet and cash flow. Industry trends like growth, competition and economic factor influencing the market. Then macroeconomic conditions, right? Impact all over economic factor like the interest rate and inflation. जैसे यहाँ पे लिखा हो गया है दोस्तों कि मार्केट में बहुत सारे फैक्टर्स अफेक्ट करते हैं, इसलिए मार्केट का वेव अप डाउन होता रहता है. तो कभी कभी मार्केट मिस प्राइस भी होता है. अगर मार्केट मिस प्राइस हो रहा है तो यू गेट चांस टू एंटर इन मार्केट, राइट? So you don't need to take any significant risk, right? You can manage risk by data, right? So the conclusion is efficiency versus informed decision. So the efficient market hypothesis suggests that the market are difficult to beat, but fundamental analysis help you to identify undervalued stocks or overvalued stock, right? It is a long-term investing approach, right? You just need to assess this company's fundamental ratios and fundamental numbers, and you will get all information data that stock is undervalued or overvalued. If the stock is overvalued, you don't need to take a significant risk, right? You can find undervalued stocks by doing fundamental analysis. So be patient. For fundamental analysis is a marathon, not sprint. Thanks, friends. So next video we are going to learn about financial statements. Stay tuned. Jai Hind.